directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Good morning, everybody. How we doing? Happy Tuesday. Markets are down a little bit for the morning, mostly with a gap. Intraday price action pretty chill so far, just back and forth noise. Just zooming out, there are some levels that I want to keep an eye on. Let's go to the 15-minute time frame here. So lots of gaps, lots of back and forths. Gap fill from today would be up around 56.50. We have a gap fill from last week around 55.50. We have previous structure right here, support, resistance right around 5,500. I would imagine price is going to be relatively quiet, most likely not directional today, in lieu of the Fed tomorrow afternoon. A lot of times I do see these last 3, 4, 5, 6 months of Fed days, like Monday, Tuesday, Wednesday, pretty calm, everything kind of around the Fed. So anyway, looking at some intraday price action, not a ton is going on. I'm looking at a trade this morning around 5,700 would kind of be my upside limit. I don't think we're going too much higher than 57, and 5,500 being my downside. Problem today is the VIX has been beat down enough that I'm not getting a ton of premium if I'm selling. I actually passed on the trade this morning, so it actually would have worked out because we did have just some centering price, which is fine. But I'm waiting to see if I can get something, a couple things. Either one is, how does price behave if we come back up into this gap? Do we fill the gap with some room to the upside? Do we fill the gap and have like a range day? I'll keep an eye on it. I'm noticing, some of these flows back up to 57 are filling up. I don't think we necessarily get there today, but that level could be in play for this week. So if you're looking at some key levels for this week with the Fed tomorrow afternoon, and then the Fed usually is kind of the market's excuse to like break out, give some directional pushes on Thursday, Friday. 5,700 on the upside, 5,500 on the downside would be two levels I'm watching this week. Okay, I'm going to get some updates going for. I put in a trade yesterday. You could do something similar. If you'd like to do that today, I'll put it in Pulver alerts right now. So this is, I'm still rocking a 257.50 call with some ownership. HIMS, my ratio spread is up about 75% profit right now. And the nice thing is if HIMS continues to go higher, then this is just going to increase in profit. So if this is accurate, where I can get 95% of this profit now and not have to wait 255 days, obviously I'm going to take a majority of the profit now. Let me see if I can close this down. If there's enough liquidity, I think HIMS had earnings last night, or is it today? It can't be today. There's no way. Yeah, they had earnings. Okay, so big push to the upside. We were all the way up to $48. Ooh, that would have been nice to have that diagonal spread still running, but whatever. Anyway, earnings were solid. Let me see if I can get out of this thing for like 90+% of profit. Right now, showing about 94% max profit. If I can close this thing down, I'm going to get out. $1.30 max credit, trading for $1.22. Can I close this down for a 5-cent debit? Survey says 6-cent debit. If I can keep this under 10 cents, I'm going to take the profit. 6 cents, 7 cents. 8. All right, 10 is going to be my final offer. If not, I'll just sit on it. 9, 10. All right, final offer. Not taking it. All right, I guess I'll just wait. No big deal. Okay, let me get into stock option trades. Tesla. Here's the position. So Tesla, here's what I did yesterday on Tesla. So I bought some shares, and that share fill was 279.61. So I'm down about $4 on the shares. Okay. But I've got a covered call at 280. So if price does get back to 280, okay, so be it. I collected $8.10 on the covered call. So I'm going to show you the math that I did. I'm going to type this in. This is a new trade. This is new trade. Tesla. Buy 100 shares at, and if you're doing this trade now, you can obviously get a better fill than I did. But I bought the shares at 279.61, added a 5.9 expiration, sell 280, call for 810 credit. And then I added, for a put protection, I added a, let's see here, I added a 718 expiration, buy 125 put. And that was only $1.01 debit. So net position is 279.61 minus 8.10. And then since I bought plus 2.02, so my break even on that trade is 279.61 minus 8.10 plus 2.02. My break even is 273. 273.53. I will continue to sell calls against this position to generate income. So let's say this week that Tesla is greater than 280. Well, I'm going to sell another call at 280, or I might sell a call at 280, 250, or 285. But more than likely, my goal is just to take the break even right now, which is 273.53, and lower the cost, lower the cost, lower the cost. Ideally, as I try to lower the cost to, generate $1,000 of income, $1,500 of income, 2,000, whatever. I don't know how long I want to hang on to the trade. I'm pretty bullish through like end of June, meaning if we can just kind of survive this area, I think that, July is like the one kind of uncertainty period that I have, because I don't know if this tariff window is going to be more chaos for the markets, or we have more clarity for the markets, right? Like it's kind of a big 50-50. I'm hoping that it's more clarity for the markets, and the dust settles and everything's like, yep, we did some trade negotiations. This is what things look like, as opposed to, hey, we still don't know what this trade deal is going to look like. We still don't know if we're going to have all these trade partners, if we have more, frenemies now. But July is that big uncertainty, and the Fed starts to cut rates, and we'll see if there's, good data, bad data. Earnings is okay. Earnings comes in like consensus wise, earnings are coming in okay. And yeah, I mean, to me, it's an income trade at first, not necessarily a long-term play, but I think a lot of traders out there would consider Tesla a long-term hold, especially after being down 55%. So the more income I could generate, the premiums are pretty solid on it. So so stay tuned for more updates on this position. The goal is to lower overall cost and eventually let the shares get called away for a nice income trade. All right, so that is the trade on Tesla. And the reality is, if it goes up, if Tesla goes up, I may not, if I have a covered call, I'm just going to keep rolling that for income, but I'm not going to try to stay ahead of it. I'm going to try to keep these covered calls within like 1 week, because the premiums are pretty solid. Okay, so I put that trade in yesterday. If you wanted to do something similar to that, you are getting a better fill. You're saving about $5 off the share price. But like I said, I have a put that's not showing profit yet, but I went out farther on the put. And the reason why is if price does end up dropping back down on Tesla towards, let's go Tesla here. If price ends up coming back down towards, let's say 220 or 215, well, then the 125 put is going to be gaining in value. So if I can turn, $1, and I have 2 contracts on the put side, by the way. So I have 100 shares that are covered, and I did a 2 contract hedge that was cheaper. So I'm willing to sacrifice that $200 on the trade. But net, I'm trying to make at least $1,000 on this trade. Hopefully more. Okay. All right. So I added that trade to Tesla. Snap, I put in a trade yesterday. I bought shares at 8.56, added a collar trade where they get called away at $10, or they're protected with a long put at 7. The expiration is out 45 days, pretty textbook as far as like the timeline for like calls and puts for me, about 45, 50 to 60 days. And, right now it's like net down $20. I'm looking to see if Snapchat can still get into like the teens. I think that there's a good price target on Snapchat around $13 to $15, which is way up here. So if we zoom out, I mean, there's been a pretty nice range. Intermediate highs around 13.29, and then obviously the 15.16 highs that we saw back in June of last year and December of 2023. They did have positive earnings. The guidance wasn't super awesome. I think that's why the market dipped initially on earnings. But I do want to have downside protection during I don't know what it was so bad about 2018 for Snapchat. I would hope that 7 years later, this company's evolved enough that we can, kind of get off these lows. But I'm prepared that if it has to come down here to like $6 or $5, that I'm going to continue to have some protection. So this is another one that's like, it's not super expensive. I did 1,000 shares. For every dollar gain, that's pretty decent. So if I can get $9 to $10, $10 to $11, there's some good income there. Okay, all right, we'll do a little top down here. SPX still pretty quiet on the day. Futures market pulling back, so we've got S&P futures up above the session VWAP for the day. Maybe making its way into this kind of measured. I think this is like the single multiplier. Maybe this is a double. Let me check. This is a 1 multiplier. All right. So kind of like the intraday range, like above session VWAP, multiplier 1, kind of like a 1 standard deviation move above or below the VWAP. So if we get up to like, and I just called this out this morning, 56.50 is likely going to be a rejection spot. Intraday that would be the gap fill. So if we come to this level, I could see price, getting there and then rejecting and then still having a bit of a range trade. Let me see if there's anything that stands out in the SPY. Yeah, I mean, SPY levels this morning, kind of mixed. Starting to see this like 555 handle light up a little bit, but these are low volume levels. I'm not seeing like any major magnets here. It looks defended, but no major like magnetic outliers on these liquidity levels. So there's kind of open space in between, but we might just kind of hang out in these defense levels for the day. Tomorrow's a new day with the Fed, but just not forcing trades right now. I was looking at some income opportunities yesterday. Did some earnings trades this week. Earnings trades, added a trade in on BILL, added a trade in on UPST, that's Upstart, and then added a trade on App. Take a look at those really quickly. I don't think they had earnings yet. Not yet. So Bill, not yet for earnings. Upstart, not yet for earnings. And App, not yet for earnings. I'm watching a trade on Amazon. We're still hopefully pushing down towards this blue level. And then Apple, I took profit on yesterday. We're staying below the 200 threshold, which was good. And then I have Hood running as well. We're still right in the freaking middle. Gosh darn it. So on some of these earnings plays, I need to see if price can get above or below or 2. I need to see if it gets at least to the expected move for some of the trades. Okay, currency strength on the day. Here is yesterday. Japanese yen was strong. Today, Japanese yen is strong once again, along with the pound. The New Zealand dollar is coming back a little bit. Aussie's coming back a little bit. Swiss is weaker. That's a good sign. Let's take a look at some of those currencies. Aussie Swiss still climbing a little bit, seeing some profit and hopefully a lot more to go. CAD Swiss actively looking to carve out some lows here. Daily time frame oversold with divergence. Euro Swiss, I mean, this support level to me is pretty strong. So just watching. But on my Euro Swiss positions, there's my break even. If I get back into this clustered resistance around 9,600, I'd be okay taking some profit there and then just reloading positions. So if I can get, based on this break even, if I get price up to 96, I'll probably take some profit and then look to add back in at some fib levels, like use this low to high, try to add back in and scale in, and then look for a swing, either a 3 to 5 wave swing. So, these like Swiss trades for me will continue to evolve, and I'll just keep, hanging in there. Pound Swiss looking good. Anybody buy the Pound Swiss? I mentioned if you wanted to start small, right back into this pocket, which is where we're bouncing now, area 1, and then at the lows would be area 2. So you got to trade small to kind of stomach that drawdown, which is about 300 pips, but upside of 1200, upside of 1300, even up to I'd say even 1.12 to 1.14 would be a pretty good profit target right there. I mean, so you're looking at anywhere between 200 to 400 pips of movement. Pound Swiss, I think we fill this pocket. So not too shabby. New Zealand Swiss continues to look better as well. This one showing some profit and hopefully a lot more to go. If this is going to keep grinding higher, I may take some profit in here. Take the profit and then look for a pullback, box in some fib levels, so a 382, 50, 618, and then look for some type of swing to symmetry. If that's a 3-wave move, bring it on. I'd love to see a great profit target there, and we could still get a 5-wave move out of this. But I'm not trying to take a bunch of unnecessary risk when the most common thing, especially if you're in a downtrend, and you actually eventually catch the low, the easiest trade is a 1, 2, 3. Same thing as if you're at a high. If you're at a high, easiest trade is a 1, 2, 3. If you want to wait for that extra 5th wave, it's like that's sometimes getting greedy. If it's still in an uptrend, usually you don't get a 5-wave, you just get a 3-wave. So if we can just get a 1, 2, 3, I think I'm okay taking some profit. If we get a 5th wave, which off of like crazy historical lows, yeah, a 5th wave is very possible if we're in the bottom. But I don't need to be greedy if I'm in a nice chunk of profit by the time we get that 3rd wave. So I'm still holding these currencies. Dollar Swiss, still hanging in there. So, I mean, pocket-wise, I think dollar Swiss comes back to this level. We might still, slide lower. There might be divergence here. I'll see what happens. We probably have to get on the right-hand side of the trend line. To be fair, resistance here, resistance here. This might take a while to kind of form the bottoming pattern. But if we get on the right-hand side of this trend line, it certainly looks a little bit better to make a recovery. Bigger picture-wise, is it possible that this thing, catches a bottom? We did clear these lows and sweep these lows. So if we are going to form a low here and then get all the way back up towards 92, that would be pretty nice. I did say this year that probably for the dollar Swiss to come back up, we do need to see a correction in gold. Okay. I did close out a trade on CL as well. So crude light futures, we are up. You piece of. I closed out for break even yesterday. That was the trade that I wanted to see go up. I just took a small loss. It was basically fees only. I took a break even, so I think I paid, $10 commission in the futures market, so I lost $10 on the trade. But if anybody is long, this is what I talked about here. If you're long based on that support, I could see this coming right back up here. We've got support around $65. So if you're long, that's a good spot to be long with a tight stop because upside is pretty favorable. Not bad. All right, let's go dollar index. Dollar index, still not ready to do anything major. I mean, I'm not taking the bait. I'm not going to take the bait to sell the dollar. Okay. I think if the dollar, makes a move in here, we still have a pullback But I'm trying to think what type of news and catalyst we have. It's like, does the Fed get the dollar to move a ton? Maybe. Would the dollar move a lot if the Fed decides we're not going to cut rates? If they really change up the plan for 2025, I'm still looking to see if the dollar will come back to 101 or 102. If it will grind back. If it grinds back up here, I'm looking for a trend line break, trace confirmation, stop loss above. If we revisit the lows, target 1, we break and go to fresh lows, there's symmetry, target 2. Anything lower than that would be trail, 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 and see if we have a big move. The flip side of that is, let's say that we go down to fresh lows. I think that's a trap. If we hit fresh lows and we see divergence, meaning price momentum don't disagree, I wouldn't be shocked to see it recover from there. So I don't like selling the dollar. I think we've already, for the worst start in almost 30 years and down about 9%, I don't think there's a ton more to the downside, at least without having some type of pause or correction. Okay, so oil there. Let's go gold and silver. Gold having a strong 2-day run. I'm sure every aggressive buyer that's like, we got the 21 period moving average, we got to pull back, I'm buying gold. Yeah, maybe you're happy. I don't know if we're going too much higher than these previous highs. I can see gold consolidating here. And this isn't bad. Consolidation also means that, look, this can stay bid. If we consolidate here, let's say there's lows and there's highs, let's say we consolidate. Well, if the 21 period moves up and the 50 period moves up and the 100 period moves up, even a consolidation range like so offers up stronger support to buy. I'm not taking this like first dip. I'm still going to stand my ground. It's like, look, I've got a 3-year run on gold that I'm still holding, and I'm happy to hold it. The one thing I was looking at for the end of the year, and I'll actually, I did put this in. It's not filled, but I'll talk through the trade. I put in a pending order on GLD. It's a December 19th. It's right here. Oops, not December. I need to go GLD. So I put in an $8 credit for December 31st, 245 put. And the reason I chose $8 is because right now, if I look at gold, okay, if I look gold about 30 days out, an at the money trade on gold is around $8.20, $8.45. Okay. So this 200 moving average is trading around 2,800. You look at GLD, that 200 moving average is around 257. So it may not get filled. Like realistically, it may not get filled. But if price ends up if it goes sideways, right, I'm not super pumped about buying that low. I know that we could go higher. I know that gold can still rip to the upside and be just like this, monster move, and maybe one of the easier trends in 2025 into a bubble. But obviously, I'm looking for more dynamic support. So if we have a 275 support level, a 255 support level, this is where I'm certainly more interested in buying gold, like adding to my position, buying more shares, and this little consolidation, if that's what we have here, still not that interested. I'd rather just wait. I'm long for the last couple of years. If we just break and go higher, I'd rather just let that consolidation break and go higher and continue to run with the gains that I already have. If I want to add to it, I'm going to be picky. I'm going to be picky on where I enter. So anyway, this trade's still running. So GLD is here. So I still have a bull put spread. There. And it's up about, realistically, it's up 90.5%. I don't really have to do anything else on the trade. It's like, just get out of it. I should just get out of it. I'm saving 255 days of time. I'm getting 90.5% of the profit. Capital efficiency wise, I'm almost better off just taking the profit than just keeping the shares that I have. That's up, $3,000 on 10 accounts. So let's see. This is going to close out for like 20 cents. I'm going to try to let this go to like 94%, 95%. I'm going to try to turn this into a $200 trade. And also I wouldn't mind getting more shares of GLD if it came back to 245. So I don't have to do anything. I mean, I certainly don't plan on waiting 255 days for this thing to close out for profit. It's already up 91%, which is good. But let's see. So the trade I was crafting yesterday was because an at the money move out 30 days is about an $8 credit. I'm trying to put in like a 260 or 250 put, like a cash secured put that I'm willing to own some GLD, and try to put it around an at the money price. So an at the money price is around $8. If we have an increase in volatility, it should also swell that premium. So if I could get filled at $8 at 245, I mean my break even would be 238, and I would own gold at a discount of around 25% off of recent highs. So, wishful thinking for right now, but maybe the patience would play out if we don't go any higher and we in fact do make a correction. And I mean, look, an orderly correction on gold would be perfect for longer term position to come back in and buy gold. I just wonder if the concern is that we just keep going up, 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 up. It makes everyone chase price, and eventually there's going to be a crash in gold that I don't want to be a part of the crash as far as like I don't want to lose profit on the trade. So if we get a bubble type move, like I'm going to be moving stop losses pretty aggressively, and eventually it turns. So that's why I measured the like the 30% stretch away move on XAU up here. So if we stretch away from this EMA, that's around a 30+% stretch away move. So if we have that capitulation, right? So somewhere between, I'd say around 3650 to 3800, maybe looking at some profit protection if it just keeps going up. Okay. I still like silver and it's performing well. Silver might set up for a slightly better trade. Let me look at like a 26 put right now in silver. So let's go SLV. The SLV level is a little bit lower. So this would be previous support around $24. Let me look at like a $24 put. So trade on SLV. If I go out to the end of the year, what's a $24 put? I don't think the premiums were that great. Nope, they are definitely not. So 40 cents. But it's not super expensive. How many shares would I want to own? Maybe another 300 shares, maybe another 500 shares. So, I mean, it's an income trade. If I did a 5 contract trade, I'd make $200. That's income. I'd be willing to own it, flip it. But that is boring. And no, I'm not going to take the trade for 40 cents. Right now, like an at the money is trading for, $2 and change. So is it possible that this trade offers up $2 and that would be another 10 grand of that'd be another 10 grand allocation. So if I did 5 contracts at $24, $24 assignment, $2 times, let's go 500 shares. So if I did an $11,000 allocation, I mean, that wouldn't be awful. I don't know if that's going to get filled though. That could be wishful thinking. I'm going to put this in though. So $24 pending credit at $2 out to the end of the year. That would be any type of pullback we would see on silver. I would own some more shares, so I'm willing to own another 500 shares. So $2 credit. Let's throw this one in. Let's go in for buying power, $411. It's fine, plenty of buying power there. Does this account, do I want to take on, if it was 22? All right, so I type about $5,500 in buying power. It's not awful. Okay, I'll put this trade in. All right, so $2 credit, and I'm going to do this for every account. Okay. 2. we go. That's an IRA account. That's a little much for the IRA account. I'll probably hold off on that one. I'll do a 1608. This one reduced by $400. 336. Okay. And this top margin account. All right, so adding those in. So that is a pending order. 1231. 1231 expiration. Sell. 24 put. $2 credit. Pending. All right. So not filled. It may not get filled, but if we have any type of correction in gold and silver, I'll be looking to see what the premium looks like on those trades to get levels that I'm interested in. Overall, I'm still pretty bullish on silver. Measured moves all the way up here towards $44 on SLV. Measured moves on silver, XAG, up to $41 and $48. Gold, I mean, we're already at all-time highs. We're having a 2-day move that's pushing us back up towards those highs again. I think there is still consolidation. So high, low consolidation would still offer up some support to buy from. I just get, you know, that's not a great level. I would say that's like, okay, that's a near-term support level if you want to buy area 1, but I would want to have dry powder for an area 2 if it pulls back a little bit deeper. But I still like gold. I mean, global uncertainty is certainly fueling gold. Central banks are buying it like crazy. And the hard part is you're just measuring all-time highs, and it's hard to project like where it goes. But when it's kind of in this this rare stratosphere of like everything's up and gold is up and it can't be stopped, then you never know how high it's going to run. Okay, Bitcoin still hanging in there about 94.2 right now. If we pull back, I'm still looking for a pullback into this like 50% zone. If we get a pullback and then a swing, if it keeps melting up, that's fine. I would expect this to be a range trade perhaps. If I'm wrong on that and it just keeps melting up and then it consolidates, I mean, who the heck knows? Maybe it just consolidates and then breaks out. And this is all part of a bigger push and a bigger swing. 125 to 145 are some projected targets in Bitcoin. So if we do clear the 109 highs, I think we can go to 125 to 145. Okay, MicroStrategy still hanging in there. Earnings were terrible, but it doesn't really matter because it just trades according to Bitcoin. Coinbase still hanging out around 196. I mean, I kind of want to look at another 111 here. Let me see if I don't think the premium is going to be high enough to take this trade, but you know, we were down to 142. Let me see what this would look like here. So 140. We go to Coinbase for a second. Coinbase's earnings May 8th. All right. That's this week. Yeah, that's Thursday. All right, let me price something out here. Let's go coin. Average move on Coinbase is around 9%. So we're at a 196.10 times 09. So about a $17.6 move. If I go into, so this week's plus or minus is $14. I'm looking for about a 1760 move. Go out to next week to be on the safe side, about an 1840 move. So I'd say between $16 and $18 a movement on Coinbase is pretty fair. How often does it at least hit a 9% move? Let's find out. So if I went within about 8 days, how often do we hit 9%? Well, we hit it there, we hit it there, we don't hit it there. 8 days later, we hit it there. Close, but not quite. Not quite. 8 days later, we hit. This one hits right away. This one does not. This one does not. Actually, I take that back. This one was 8.91. Just shy of 9%. Not enough. Did not, did not, did not, and then finally did day 8. I wonder what the 1 day move. Let me price something out here. Coinbase earnings on Thursday. I don't know if this is a smart one to play now or after the Fed. So this is after market Thursday. I think the Fed might also kind of disrupt some price action here. So let me see. I'm just going to price this one out. So if we look at a May 9th expiration, if I were to sell a 945 and a not 197 or a 192.50 and a 197. Let's build this trade out. Let me go. I'm going to build out this trade. So this would be, where's my dead zone? So I think it's an iron butterfly. Coin. All right, let me build this guy out. So if I were to sell the 192.50, I guess I got to construct this with a 195 and then go out about $15, maybe 15 to 20 bucks, and we'll take the risk. So let's do 195 on both. So I get about $15 here. Expected move is $14 by Friday. Let's look at a 20 wide. So that'd be a 210 call or 215 call and a 175 put. IV rank, apply volatility. All right. Friday, May 9th. This is only, the heck, man. So I get about $15. Got to put the spread on here. So 195 to 215 and 195 to 175. So I get 1249. Expected move is maybe 14. It's a bit more risk than I really want. The plan for this trade would be it comes out after market on Thursday. Friday is the only day to manage the trade. We'd have to have a move 1248. We'd have to have a move 1248 divided by 196. So we'd have to have a 6.3% move day one. And that's kind of the risk that I'm taking here is how many times in one day do we get at least a 6% move? Well, it did it there. It did it there. No, no, it did it there. No, no, it did it there. No, no. I mean, you can see that I don't have like a super high probability winner. It was over, under. It's kind of a toss up. So 1, 2, 3, 4, 5, 6, 7 times it was over. So we've got 7 times it was over the percent move. And then 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times it was under. So I have a tiny little probability that I would get it right if it was under the expected move for the day. But it is literally like an all or nothing. Either I'm right or I'm wrong, and that risk is 751 bucks. I don't know. I think I'm just going to pass. If it was, 12 to 13 times yes and 3 to 4 times no,
big difference, I would take the probability that way. Yeah, it's kind of a bit of a crapshoot on how it moves. So I'm going to pass on this one. Plus, we have Wednesday's FOMC. Maybe this gets prices moving a little bit. I don't know. So, but I was looking at an earnings play, income play. Would I want to have some shares of Coinbase? Let's check one more thing fundamentally, and I'll get some more currencies here in a minute. Any requests, type them in the chat for me. I'll start taking requests and go another like 10, 15 minutes. Coinbase. Earnings forecast to decline, earnings grow like crazy. That's kind of false number. I mean, that's like ridiculous, but it's probably going to change. Price to earnings ratio is below the capital markets industry. Okay. Price to earnings, not terribly expensive. But that's a big turnoff on why I would say I don't want to get super aggressive. Outside of if I owned it, I'd own it way cheaper. So, all right. I think what I'm going to do is if Coinbase, these are all profitable. That was profit. That was profit. I can get rid of these trades now. If there's a floor, if Coinbase comes back down to the lows, I mean, obviously this could be support, and we could still work our way back up into 260, 270, 280. I would prefer, if possible, that price comes back down into support, and I can start looking at some income trades in the low 100s, like a 110, 100, maybe a ratio spread, and hopefully takes a profit based on this support level holding. So if I get a chance to put in a couple more ratio spreads, it'd be we revisit the 150 handle, 140 handle, and I'll go out of the money for a ratio spread, try to get some $2-3 income. So anyway, all right. Anything on copper? I see pound CAD came in. All right, we'll talk about that. Copper, just kind of a big messy position. So high, low. I could see copper just being a wedge for right now. I'm not getting directional. I would be interested in copper with a low risk, high reward setup. I'm not that interested in saying that copper is going to automatically go up. I don't think until we have trade war resolution that copper is going to get super excited. There's too much kind of reliance on China, I think, for copper's upside, and in order to get like a real clear picture of China, I think we have to have the U.S. and China relations resolve. At least look better for this whole trade war situation. Japanese yen, okay. FXY, still holding shares of that. EWJ up to some fresh highs. That's good. I mean, I am curious. I guess I'll do a measured move here. Maybe this is just a big range. From this resistance to this support, maybe this is just a big range trade and it comes back down. But if we are going to break here, this low, this high, if we break this high, is it possible that we double that move? That would probably be a profit target for me for the shares that I have. So if we go from low to high, and we go above or even up here, I would project a target around $82. So is it possible that we have a push into some new space, clearing some recent all-time highs and running into the 80s with the Nikkei performing pretty well? Maybe. I'm going to hold my EWJ to see. That's also a kind of a non-US play, diversified. DAX just shy of the highs. Still, don't be surprised, man. This thing might be off and running. It's been like a hated ETF. The Eurozone's been like a lot of argued uninvestable. I mean, what's crazy is like these are areas that like nobody wanted to invest. Nobody wanted to invest in China. Nobody wanted to invest in Europe. And here they are, like some of the best performing ETFs of 2025. It's not something I want to chase. There's a lot of volatility attached to them. I think if you do see some outperformance that's non-US, that's great. It's encouraging, but it's not something I want to chase when it's already up 20+% for the year. Dips and pullbacks, sure. We have this V bottom and this thing runs to the top and we have some consolidation. Well, sure. Yeah, you can still buy that with a trade. But if I miss my opportunity here and we're back up to the highs, I don't just buy this thing at highs. I want to see it, if it's going to clear the highs, then pull back and retest the highs. Well, that's an easy trade. I can at least create some type of, technical trade.
FTSE, it's kind of the same thing. If we come back up to highs on the FTSE, or we pull back a little bit here, like looking for this to get back to highs, there could be still a trade in the FTSE. I'm going to hold off in Argentina. China. Oh, what's up, China? Doing all right. EWZ back to the 200. ILF hovering above the 200. Mag 7. I'd like to see some. I mean, if there's resistance here, it'll be interesting to see if Mag 7, fades a little bit lower. Do we get some gap fills? Do we make a higher low? That's what this trend line is right here. If I stretch this out, so this trend line support. Trend line support. If Mag 7 comes back down to trend line support, we could still kind of grind our way through this. Is this going to break and go to highs? Is this going to be something that revisits lows? Obviously, if Mags is back down to lows again, I'm still interested in having some exposure. Apple, 198. That earnings trade was profitable. Amazon is still in the middle. I've got an expiration out on Friday. If I don't know if FOMC is going to bring any pain or not, but if it does, it wouldn't be terrible to see Amazon, at least hit the bottom side expected move. Broadcom is now back above the 200-day. Google is back up towards the post earnings rip, so that's kind of encouraging. I just have some dollar cost average positions in Google. Meta, we're back above the 200 moving average. I just did some ratio spreads here on Meta. That's about it, just some income. If I want to own Meta, it would be down here. That's where I want to own it. Otherwise, it was just option trade, some income. I'm not ready to say that, Meta, it's like if it comes up here and then pulls back, perhaps this is a bullish head and shoulders, right? We get back to highs, but there's the trade. I want to see that setup. Oops. There we go. Okay, Microsoft. Post earnings, Microsoft is ripping. All the allocations I did here and at the 370 level are looking pretty good. Maybe I'm just going to hang on to Microsoft to see if we get back to resistance. We could obviously have a gap fill. There's a big gap post earnings, but I would say if it just hangs out here and it's a little island, we run back up to highs. That may be a good profit taking spot. As far as like near term safety, I mean that's a huge run from 360 to 460. That's a pretty impressive run, right? We'd be up 35% back to highs. So I don't mind dips on Microsoft, but dips are going to have to be pretty meaningful. We'd have to come back to like $400. I honestly, income trade. I might just do the same thing again. So without having to own a bunch of shares of it outside of like some, dollar allocations. Netflix still not calling the top on this one. Nvidia, the little semiconductor stock that nobody cares about anymore. We'll see if it can get back to. I mean, the 200 moving average is hanging out around 120. So if we can clear the 200 moving average, there's a lot of chop right in this zone. There's, you can see structure resistance and support right around 130. So I'd say in the near term, if you're looking to if you are long on Nvidia from these, bottoms, a 125 to 130 price target, I think would be a pretty safe spot to be taking some profit. S&P, we talked about that earlier. I just think it's going to be nothing until we have FOMC tomorrow to maybe break open some volatility. It's going to be pretty quiet these next couple days. Like today, so far, pretty quiet. I'm looking at levels that are just right in between. So 570 to 570 to 550 on the SPY, 5,700 to 5,500 on the SPX. So I've got a little level that's popping up here around 57.25. I don't think we're going to get there today, but just noting that these are typically like weekly levels that I'm watching. So all my bearish sides have kind of evaporated for the day. It's mostly well, I guess we could have more of a melt up. But this is all subject to change, and I would say FOMC is going to be more important to watch tomorrow. Okay. Tesla, I talked about that one earlier. Berkshire, fine. Bonds, I guess a little bit off the lows, not super exciting. 2-year yield, 10-year yield, still sticky, still above Liberation Day levels. This is where the Trump administration is saying lower the rates. They're kind of strong arming the Fed, but I don't think the Fed's going to budge. This is why I don't think the Fed cuts rates and watches the market see yields go down. If the Fed cuts rates in July, I don't know if this goes down. I think if anything, if we're going to track foreign debt, we probably are going to see the yields. Maybe they don't go up, right? Maybe they don't go up here to 5%. Maybe don't break the market. But I think they're going to be sticky. I think this like big shakeout we had in the bond market, we're probably going to see some sticky yields around this like 10 and 20 year. So, I mean, if we have yields up here, then you're going to entice, honestly, you're going to entice a lot more like low risk in the markets. If you can go, 12-month money market instrument, 12-month CD, and you can get 4.5 to 5% with what is supposed to be little to no risk. I don't know why a lot of people are going to participate in the high volatility of the equities market if you can get high yields with virtually no risk. And I say virtually because it's still based on the U.S. and it's still based on U.S. government, and that's not necessarily debt that I'd want to have long term. For 12 months, sure, but not long term. The 3-month yield hanging around 4.3. I watch this from the 1 month and 3 months so I can see if I'm putting money into BIL. That's for unallocated cash. It's treated like a treasury. What else? Let's get into some currencies. Let's check China really quickly. So HSI is up. QQQ is up. This is CQQQ. Alibaba is up. My Alibaba exposure is still Alibaba here. That's it. Well, I mean, it's up $600. Let's see. Well, I'll take a look at this. If Alibaba heads up to these recent highs, then I'm probably going to look at taking some profit. But I think we can get a, run to 150, 160 would be a good profit target for me on Alibaba. I mean, the crazy part is it's probably not going to be without volatility, but this could be a stock that runs like ridiculous. I mean, is it possible this is a $250 stock at some point? Maybe. So would I like to hang on to it? Yeah, I would. So I'm probably going to hang on to some Alibaba. Baidu, I have shares of Baidu. This one's down, but I like the technical side of Baidu. Baidu it hasn't ran yet. I mean, if Baidu is going to be a runner, we break the structure. This is a falling wedge. We kind of hold and consolidate in the zone. If this gets clearance and confirmation, I think we've got a 100 to 157 or 100 to 160. That's a lot of direction. I mean, a 60+% move. I'm going to take a stab at it. FXI, this is large cap. I still have some exposure here as well. FXI has some shares up around $600. KWeb, I'm out of. MCHI, JD, I'm still in. JD earnings next week, looks like May 13th. These are out to May. I think that's all I have for May. May 16th. Yep. So $40 calls. Right now, calls are up about 95%. We have earnings that week. So if we get a big pop to $40, perhaps it gets called away. I have 1,500 shares covered. I've got some naked puts out there as well that are up about 56%. But these are much lower prices. So like 27.5 and 3, 27.5 and 3. I'm going to see if price goes up, like we get, let's say JD's at $38, $39, $40 post earnings. This naked put combo is probably going to look like a 75, 80+% max credit, and I'll look to take some profit. So I'll keep an eye on that one. Schwab dividend, Schwab growth, non-US. Let's go SEHY. If I can type. Look at this bad boy. We're up to some fresh highs on SEHY. Now up about $1,800. So I bought some shares. It's not super aggressive price action, but as a diversifier, if we're going to see the U.S. underperform the world, this is one pretty easy way to trade it. So I did anywhere between like a $2,500 to $5,000 allocation, and we'll see if we can get a little world performance. So this is mostly Europe and China. SEHY. It's a Schwab ETF. But I mean, so far so good. Okay, and I mean, to be fair, it's like I had to nurse about a $2 drawdown. So I mean, we're right back up to high. I mean, I'm excited we're back up to highs again, and if there's more to go, I mean, who knows? This is the previous all-time high, I think, on this instrument. So if the U.S. is going to underperform, the world's going to outperform. I don't want to cap my gains on this. I think this is a good way to have a diversifier and have some exposure, non-U.S. Okay, what else? Let's get into some currencies here. Aussie CAD. I'm still long Aussie CAD. Oops. Yeah, I'm still long. If this is a bottom, let's say we come up to this resistance level, this could be a good structure trade. We could still get a pullback. I don't mind getting another chunk of mini lots, micro lots in this pullback zone. So if Aussie CAD can push up a little bit higher, that would be my kind of signal top, and we pull back into some support. I want to take that swing. I'm still looking for a price target around 94. We did some of the Swiss pairs earlier. I'm just going to ride these out a little bit longer. If it is a wave 1, wave 2, wave 3 to symmetry, I'm taking profit. Aussie yen. If you bought the August 5th bottom, just manage it. Aussie New Zealand, I'm still going to hold. I'm going to dollar cost average in at 106, 103, and 101. Aussie dollar, it's in open space, but like I said, I'm not going to buy this. It's in open space. I get it. I'd rather see a pullback. If we pull back again below the 200 and then back above it, I like that trade. I want to see a dip. Currency wise, I don't buy highs. I don't sell lows in currencies. I wait for pullbacks. CAD Swiss, actively looking for a bottom. If we come back to this level, this could kind of work its way up into this support. Pull back, dollar cost average in, get another swing. Wave 1, 2, 3. Yeah, I mean, I might take profit here on 62, but I'm trying to get back to this cluster on 64. CAD yen, pullback on CAD yen. Could be some support though. Watch this support level. Watch that support around 102. Swiss yen, no trade. Euro Aussie still sliding lower. I didn't get the pullback I wanted. Euro CAD, I talked about this being short. If you're short here or short at equal highs, area 1, area 2, I still like this pushing back down to 5,400. Especially if oil is bouncing hard at that equal low, we could probably see Euro CAD slide down to about 5,400. Euro Swiss, looking for this low at 92.25 to hold, trying to get back into 96. Euro pound, no trade. Euro yen, no trade. Euro New Zealand, still sliding lower, not offering the pullback that I wanted. It's likely sliding back into like 86 or 8,500. Euro dollar, it's quite sticky. I still think this resistance level will hold. So if you're selling euro dollar, area 1, area 2, stop loss above by about 1 ATR. And if we end up heading down, it's just a simple swing. Here's a 23, 30, 38%. Those are just retracements. If we fall into those levels, I take some profit. And then I start looking at position for, is it possible to then see this area offering some bounces? If the dollar is going to get weaker, euro dollar long would be the way to expose that. Pound Aussie, no trade. Pound CAD, don't really love the pound CAD unless I was able to get a sell trade at the highs. So this area, maybe a sell trade at the highs. Stop loss about 1 ATR higher. So equal highs, maybe a sell trade in here. but I would just target the previous range lows. There's a lot of support resistance in this area around 8,100. So that's about it. Maybe an 86 to 8,700 sell trade, down to about 82, 81 profit target. Not bad, 400 to 500 pips. Pound Swiss, I like this one long up into the the 112.50 to 113.50 window. Pound yen, no trade. Pound New Zealand, possibly a bounce. Not now, but like if we come back to the 200 moving average, look for this to be a short-term buy opportunity. That's it. I mean, look at it on a smaller time frame. Pound dollar hasn't really turned yet. Clearly a lot of indecision at the tops. Not calling the top yet. If we break the lows, yeah, we could sell off. But I think euro dollar is a better trade. I've said that for the last couple of weeks. I think euro dollar is cleaner. New Zealand CAD, I still like this trade. Maybe I'm long in this pair. Maybe this consolidates a little bit longer. But if we have some type of bullish pattern, I'm still looking for a pushback up into previous highs. So I like New Zealand CAD long and willing to kind of ride this one out. New Zealand Swiss, same thing. I'm currently bullish in profit, trying to get back into this would be kind of wave one at these highs, pull back wave three, and so starting to take some profit. Initially, I've got profit targets way up here. I don't know if I'm going to hang on to it that long unless I'm willing to ride out like a 5 wave, which maybe I can, but I think being up in a 3rd wave is still very profitable. Okay. New Zealand yen, that'd be the August 5th bottom. New Zealand dollar, trading in some open space. I'm going to look for a little bit more consolidation here. If we get it, not a bad spot, right? I mean, it's still like we could pull back here towards 58.50. We could pull back, off this swing. We could pull back much deeper, like a 50618 zone as well. I still like this trade to the upside. I just want pullbacks. I want some pullbacks. Dollar CAD, slowly sliding lower. I'm staying out of dollar CAD. Dollar Swiss, probably have to wait long enough. I mean, we're oversold with some divergence. Last time we had levels like that, this was a low, this was a low. So I'm looking for a low to form. But, this might be a little messy low. And eventually, we get on the right-hand side of the trend line and probably work our way back into, maybe 92. But this is, to me, dollar Swiss, I'm telling you, like Swiss pairs are probably going to be gold related. So if gold ends up correcting, the Swiss will likely weaken. If gold stays firm, then the Swiss is going to stay pretty stubborn too. Without some, we'd have to have some Swiss National Bank activity / intervention, which I don't think they have any interest in doing that right now. Okay, and the dollar yen coming back down to lows. Maybe not a bad. If you're watching dollar yen, watch this level here. Okay, daily chart compared to a smaller time frame. If we see the smaller time frame turn back into a buy opportunity, I still think you have a decent reward to risk trade on dollar yen to the upside. It would be based on this support holding. If this support doesn't hold, then obviously don't hold a long position. The key here is if we get some confirmation on a smaller time frame, turns bullish. I like the trade. Stop loss, below the U-turn, and then see if this wants to head back up into like a 148, 149 pullback zone. So that's it. All right. Coming up earnings wise today, and then we have FOMC tomorrow. Let's go stock twits. So do we have some notables today? Notable earnings today. Some of the big ones: AMD for semiconductors, Lucid for EV. That's kind of it. I mean, that's after bell today. So AMD is probably the big one. I took some profit on this one earlier, or I have a ratio spread. Let me double check. AMD is here. Yeah, the 65 by 60, that's a ratio spread. So it's already up 77% of max profit. I don't mind also owning shares of AMD. This one would be AMD.
Snowflake looks pretty good. Price to earnings, not cheap, but undervalued, and I'd be looking to own the shares at like $60. So I think the probability of my trade is pretty high compared to its peers. It's an interesting mix of peers. Like I wouldn't compare this to Texas Instruments necessarily, but whatever. So this is one of the companies that would also be benefiting from AI build outs and infrastructure, data centers, chips, computing power, the future. So anyway, we'll see. But there's my trade. I mean, we're way down here. So earnings, unlikely to have some crazy, ridiculous move. I would imagine also we have the ability to run back into the 200 moving average. And if that is the case, let's say AMD comes in with positive earnings. If it's positive, this trade's probably trading for like 90+% profit. So I'll probably just take the profit off and move on. Okay. All right. That'll do it for today. Thanks, everybody. See you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.